This is how we get a perfect entry. So right now we are looking at the chart of the USD JPY, the forex pair, on a 1 hour time frame. So you can see that this green color rectangle here is representing the fair value gap. If you still do not know what a fair value gap is, do refer to my previous video where I covered the basics of a fair value gap and when is the right time for you to enter into a fair value gap to get a profitable trade. So over here you can see that there is a very big candle here, which is a very strong price movement action, and you can see that the fair value gap is actually being drawn using the first candle and the third candle here. So given these strong candlesticks here, you can tell that this is a very strong bullish trend that we are looking at. But let's just say we are also expecting some bearish retracement. As you can see from the red candlesticks here, the price is actually moving back down into the fair value gap box here. Let's take a look at what happens if, let's say, we continue to let the price run in the market. As you can see from here, as the price continued to move downwards, it did not respect the fair value gap. Usually what happens is, in my previous video I have mentioned, if a fair value gap is strong, the price will usually retrace into a fair value gap box and then bounce back up and head towards the directions that you are trading in. For example, if this is a bullish trend, if the price were to hit into the fair value gap box, it would likely retrace and bounce back in this case, like this. So you can see profitable trades from these directions onwards. And of course, if let's say the price continue to go downwards and down even more and eventually break the fair value gap box here, this means that the price is no longer respecting this fair value gap. So this basically means that there is a lot of sellers in the market intending to push the price down even further from here. While all of this is happening at the moment, so you can see that as the price is continuing to move downwards, there is another fair value gap that's being created, and this time around it is actually a bearish fair value gap, as you can see from here. So the green box is indicated by the bullish fair value gap and the red box is indicated by the bearish fair value gap. So what happens is that once the price actually comes back, you can see that the fair value gap is being drawn here and the price continue to move downwards, and at this point of time the price actually retrace and go back into the bearish fair value gap. So what happens is that once it hits here, as I mentioned earlier on, it will actually retrace and continue to go the other direction. It will have a price reversal at this point of time. So how do we justify when is the perfect entry? So if you can see, if you pay close attention to this, the bearish fair value gap is actually formed within the bullish fair value gap as well. This actually acts as a very strong magnet that the price will actually comes back to this fair value gap and then it is likely to actually reverse to the opposite directions. So if you can see from here, if you would have gotten into the trades from this point of time, you would have made a gains of, let's see, suppose that you enter the trades at the end of this bullish fair value gap. I'm just gonna put it into a 2:1 risk to reward ratio. I'm gonna draw it further so that it gives them enough runway. So my stop loss, I will put it in the latest swing high, okay, which is similar to this candle here. Okay, let's continue to see how the price movement goes. Okay, so the perfect entry would actually happen here at the end of this bearish fair value gap. So if I were to enter the trade here, you can see that I would like to place my trade into a 2:1 risk to reward ratio. What I will do is I will put the stop loss at the highest point of the bullish fair value gap, and then I will drag my take profit even further so that I can hit the 2:1 risk to reward ratio. So you can see that at this point of time, I would have taken profit from here and I would have made a gain of 1.47%. So this is as simple as it is. Just have to look for two fair value gaps to get a price confirmation on which direction it will go. And I would highly suggest for you to use a smaller risk to reward ratio. For example, the 2:1 risk to reward ratio, so that you will not enter into a situation that the price actually increase back up and hit your stop loss. So if you find this video useful, do hit the like button and subscribe to our channel. I'll be sharing more content in future, so keep a lookout.